Hey you guys, welcome back to another video this week. So we're going to be talking about USDJPY analysis. So I want to take you guys step by step with me on this analysis, what I'm thinking about, and the next potential play out for a currency pair. Okay, now USDJPY is a really good pair to trade because she does trend fairly well. I think if you trade this pair, it's kind of best to trade this one on the 4 hour. And I'm going to tell you guys why. So I do have like two different call to actions right here. Um, so let's go over the first one. Okay. So I said here that this one is best to trade on the 4 hour because of the high volatility. So let's get into volatility for a quick second. High volatility means that price is showing strong momentum. There's not a lot of pullbacks, however. And if price does pull back, the pullbacks are not deep or steep enough to have long distances before they continue up. For example, here, let's say this higher high right here at 125s. If you were to sell this just based on the bearish candlesticks and you sold this for quite a long time, you would get stopped out of the market. If you wanted to sell based on this candlestick and you sold for a long time again, once again, you're stopped out of the market. Okay. One of the reasons being is because there's too much volatility. Another word for volatility is momentum. Okay. Now, when I teach this, especially when it comes to volatility and momentum, I teach this in four quadrants, and these are called market conditions. And high volatility is one of those conditions. But then you have something that's called low volatility. Low volatility means there's not a lot of momentum and price does what's called consolidating or ranging. Okay, now we're not ranging anywhere in here, there's no consolidation. So for the time being, we are in high volatility, but at the same time, we are trending. Price is still creating higher highs and higher lows. Now I'm on the daily time frame, so I'm getting all of this information from one time frame. Now you don't have to drop down or go up to multiple time frames to see that price is trending. Once you get your main time frame where you can see your highs and your lows, stick and stay on that time frame. Don't fluctuate, don't change too much, okay? So with that being said, here we can see that price has made a new higher high because this full candlestick just passed the highest peak here before price did do a small pullback or retracement at 129's 398 or 129's 400s if we round up. Okay. So what this basically means now is when you think about supply and demand, I'm a supply and demand trader, but this is for every single trader here. What we do in the currency market is we're basically evaluating the relative price of how much does it cost people who live in Japan who use the Japanese yen to buy $1. The highest price or the last highest price they were buying it at was 129.39. The discounted price was around 126.95. Now they're buying it at 131 yen. This is a $2 or a 2 yen increase. Now, if you lived in Japan and you wanted to buy the dollar at a better price, you would want price to pull back. You want to get the discount, okay? The best discount is going to be above 126.95, okay? Why? Because you don't want to buy at 129. You want to see if it can go a little bit deeper. And I'm thinking around here to 128. I would say between 128 but above 126s, okay? So we're looking for at least a 3 yen decrease or a 3 yen discount. Okay. Think about it like this. If you put it into a dollar perspective, would you want to buy something at $130 or $129 or $128.50? I'm pretty sure you guys are going to use a third choice. That's what supply and demand is. How many people, because price is increasing, people have to buy if they're going to travel, Japanese people or the banks in Japan, or imports and exports. When you think about businesses, they're trying to buy something at the best dollar price. Okay. And so this is what we trade as traders. We're trading the exchange rates. We're trading the volatility, the low volatility, the trends. We're trading these things, okay? Sorry if y'all hear a lot of noise because I am by a road, okay? So if you are following this with me, also understand that price could go higher. But what won't change for right now is that this is the higher low at 126s. meaning that we want to see price pull back. Now, I don't think it'll happen today or tomorrow. It could happen tomorrow, but I'm looking for an entry back down to my estimation zone. My estimation zone basically says I am estimating this is the exchange rate I want to see price touch. So I can say, hey, I can potentially enter a trade at my zone. It's a highlighter. And then I can buy back up to wherever price pulls back from. We don't have a pullback just yet. We just got the higher high. So a part of being a swing trader is we're waiting for price to pull back for us. We're waiting for price to give us an entry. And if it can give us that entry, then great. That's what we're going to be doing. Okay. So that's USDJPY. But I also want to share another trade with you guys too. So I took this trade here on EURJPY yesterday on the daily time frame. I wanted to see if price could come back into my zone. I have two zones here, one for the weekly and then one for the daily time frame. Now, the weekly is my gray zone. This is due to an inside bar. And I'm going to show you guys on the weekly because I do have an inside bar strategy. This is an inside bar. I wanted to see if price could come back and test it and then continue up. So I placed my zone on top of the inside bar. Now, this is my estimation zone above 134.9 or 29 cents. And this is another yen currency. So as you guys can see, Euro yen is going up. Pound yen is also going up. USDJPY is going up. And so I'm correlating these to say, well, which one has the best trade that I can enter? I've not been able to enter USDJPY recently because she has too much momentum. I just entered Euro JPY. I just entered Pound Yen as well. I have not entered AUD JPY. I have not entered CAD JPY. I have not entered New Zealand JPY. So when it comes to currency pairs, when you are I call them branches. But when you're dealing with correlations, you have to see which one out of the correlations that share the same currencies, which ones have the best opportunities for you to enter. Okay. So with that being said, this is a green circle that I shared with the trading community. I said, hey, you guys, I want to see if price can come back to this zone. And some of my students are in this trade. They scattered out this trade on their own too, because in the trading community that I teach with my strategy, we all trade the same thing. Okay. And so most of us are in this pair or in this trade as well because we do talk about it. Okay. So this is from last night. So um, one of my students says that she's in Pound JPY, similar setup on Euro JPY. And then I'm sharing it with USD JPY as well with what I see. Okay. And so if price can continue to go back up, then we're going to hit profits. Now the risk to reward on this one is a 4.73 risk to reward. And on the first position, I'm going to move this up to just a little bit. First position is a 3.58 risk to reward as well. Okay, so we will see how it goes on this particular trade. We'll see if next week USDJPY could pull back. Now, I want to talk about how to manage swing trading positions. Okay, when it comes to managing swing trading positions, it's always important to understand price can pull back at any time. My main focus and concern is that price stays above the higher low at 134.29. Because if price can stay above the higher low, it's going to make me want to stay in my trade. It's okay if price pulls back. It's not okay if price passes 134s because that's my stop out exchange rate. Okay. Another way to manage your positions is don't fear the pullbacks. Now, I just created a blog. You guys can click on my website down below and just click on Forest blog about how to hold swing trading positions because I'm teaching you guys how to manage these positions. My job as a swing trader is not to trade this one currency pair every single day because then you put yourself more at risk to be stopped out. You put yourself more at risk to force trades. The job is to hold the position. As you guys can see, I'm risking 122 pips on this first trade to gain 438. But I can also gain 595 pounds. This is over 1,000 pip move, okay? What this means is that I don't have to trade as many setups. I don't have to trade as many pairs at one time. I don't have to trade this one every single day. All I have to do is manage the position. Managing the position just basically says, if it pulls back, I can try to enter the trade again. If it keeps going up, I can move my stop loss to risk free to break even or put it somewhat in profit. And it also means that if I want to manually exit the trade, I could. But it also means I don't have to do anything on the trade because it's in good profits. Okay. And so that's a part of being a swing trader. And if this is something that you guys are wanting to learn, you have questions, you can ask me in the comment section, or you guys, like I said, check out the website down below. And you can join the community. You can get access to the trade setups, access to the community, access to the video content, and live teachings that I do every single week. Okay, so I pray that you guys enjoyed this video. Let's wait to see how this plays out, even on USDJPY. Let's wait to see how it plays out as well. I pray you guys have an awesome, awesome weekend. You guys be blessed. Talk to you guys later.